Well, good morning and welcome back to the Broadcast Retirement Network. This is BRN AM for Wednesday, November 20th, 2019. Here are our top stories, trend lines, a look at sustainable investing, and then sustainable investing through indexing. From central banks to pensions to endowments and individual investors, sustainable investing has been a hot trend, hot topic. Joining me now to discuss this, what exactly is a sustainable investment, is Ryan Seberkel. He's a Senior Vice President and Investment Strategist with Direction Investments. Ryan, great to see you again.
Hey, Jeff, thanks for having me.
Yeah, appreciate you making time out of your very busy day. I know you and the folks at Direction incredibly busy. So this topic of sustainability, we know it by so many names, socially responsible investing, ESG, I mean, there's a lot of different names for it. Let's break it down for the audience. Can you just describe in a nutshell what sustainability and sustainable investing means?
Sure. I think using the acronym ESG, kind of break down and give an example of each. But what we're talking about is environmental, social, and then corporate governance. So when we think about environmental, it could be things like carbon emissions. When we think about social, this could be things like executive pay versus rank and file employee pay and how, companies fall out on those metrics. And then if we look at, governance, this could be more something like ethical business practices or, things like that sort.
Yeah. And this, Ryan, I mean, you and your colleagues are out talking to foundations, endowments, all different types of investors. I have seen this just in my conversations with folks. This is becoming more and more of a prevalent trend. But give us your insight into this as you're talking to folks out there who have, like I said, responsibilities to endowments, foundations, governmental retirement programs, et cetera. What's your perspective on this?
It's very much a growing space. I think just a few statistics on a year-to-date basis, there's $13.5 billion of flows into ESG-related ETFs. So that's even surpassing kind of the AUM on the start of the year, more than doubling its size, just flows year to date. So certainly something that's getting a lot more interest out there. This is an interesting fact from the folks over at FactSet, just mentioning that on second quarter S&P 500 company earnings calls, the term ESG was 100% more often mentioned than via the first quarter. So it's very much top of mind. I think what you're seeing is a rise of a new generation of investors that kind of take these factors more seriously than maybe their predecessors. So it looks like something that's really gaining some momentum and looks to be here to stay.
Yeah, and I even saw, I think, someone from the Fed, I don't know if it was Jerome Powell or someone else, mentioning sustainability and sustainable investing in ESG. So clearly, not only investors are looking at it, but people who have oversight of a lot of the market, or at least the interest rate environment, such as the central bank. So this is not lost on them as well.
No, I think that, while it's something that's somewhat of a buzzword out there, there are some things to consider, of course. We're still kind of vetting out. ESG, there isn't specific guidelines for what exactly it means. Everyone has kind of their own interpretation. And, there's things that can be a little bit, you can see an ESG index that has energy companies present. And, you kind of scratch your head as to why, but these could be energy companies that are much more kind of leaders amongst their group in managing the negative outputs of their business. So it doesn't mean, it's just strictly exclusionary. It can be inclusionary in the sense of finding companies that actually are kind of doing the best in their industry on some of these factors.
You mentioned the change in perspective, and I totally agree. I think this new wave of investors does have that mindset of giving back and making sure that something doesn't negatively impact the community, the environment, et cetera. But it's always been the knock on these types of investments has been that the return streams haven't been there. And I guess now that that was 5, 10, 15 years ago. Fast forward now to 2019, almost 2020, we've got a lot of data. Folks like Direction and others have a lot of data at their disposal to now vet companies. Does that performance lag or what perceived performance lag go away in today's environment? Can that be mitigated?
Well, I think a lot of it is still to be determined. We do have a lot of data, but a lot of these factors that we're trying to kind of hone in on, we still don't know if they're going to be, down the road, kind of the prime determinants of whether or not certain companies in a certain industry are successful. I think if you look at tobacco, for example, in retrospect, something that we know does great harm to society. And now we see something like vaping getting such a very quick response, and from regulators. So who's to say whether or not that's going to, 20 years from now, we'll look back at vaping just the same and say, well, you know what, that was spot on, or maybe it's a little bit reactionary. So to some extent, some of these factors, time will tell, and how things shape up. So
and they could also, Ryan, evolve depending on who are the trustees of a particular asset pool, right? So you may, if you're talking about a pension, a governmental pension, they may have elected trustees, and that may change over time, and therefore the lens by which they look through may change over time. So it's a very dynamic and ever-changing environment. Let me ask you this question, Ryan. Many of our viewers may be aware, and some may not be aware, of something called an investment policy statement, and that is basically a document which helps a manager of an asset pool determine what is an appropriate investment, what not an appropriate investment, when it is time to make a change. Are you seeing investment policies in your conversations with potential investors, and you talk to all different types of investors, are you seeing their investment policy statements including some of this ESG, socially responsible sustainability language in it to kind of give them guidance along the way in terms of picking investments?
It's a good question, Jeff. And, predominantly working within the ETF space myself, some of the things I've been noticing is if you look at the 8 of the top 10 ETFs within the ESG space, 8 of those 10 hold fossil fuel companies. So, which is pretty surprising. So, and there's a lot of reasons as to why, and some really good reasons as to why, they might be included in the portfolio. But I think when you look at more on the institutional level, and specifically those investment policy statements that might be, more exclusionary, more or less saying, something like firearms, specifically saying that there's no good firearms companies. I want all of that out of the portfolio, versus kind of that inclusionary look, which would say, well, these guys are the best at, furthering, maybe some benefit to that industry beyond just their products. Say maybe they're best at, providing more gun safety type information or what have you. But I'd say it's a little twofold. I think if you're looking for folks that just want to get exposure to the space, an ETF can be a really easy way to do it, but you want to get familiar with the actual benchmark itself and the underlying stocks to make sure you're comfortable.
I'm sorry.
I'm sorry. Yeah.
I interrupted you. Finish your thought. I'm sorry.
But no, if you're more or less saying that there's a very specific type of industry you want to avoid, well, then you might be looking towards something that's more actively managed and can specifically weed that out within the investment policy statement.
Yeah, and to your point, going back to the gun manufacturer example, maybe they're heavily invested in veterans and helping veterans. We just recently celebrated Veterans Day, and that's an example where, giving back. And, it just reminds me, Ryan, that it's not a 0 or 1 decision in a lot of ways. I mean, like anything else in life, there are pros and cons to everything. And all of these things in terms of the due diligence process in working with an investment manager like a Direction or someone else to pick the right investments, very important to make sure that you are doing the right due diligence and understand that. Ryan, I want to go to a quick break. When we come back, we're going to talk to Ryan a bit more about sustainability and maybe even get into a little bit about exchange traded funds and indexing and how these factors can be incorporated there. So stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Welcome back. We're talking to Ryan Severkel, Senior Vice President, Senior Investment Strategist with Direction Investments, and we've been covering sustainable investments in our first segment. And now we're going to shift gears and talk about how individuals can access these investments. So let's chat a little bit about, we kind of set up for the audience what SRI, what sustainable investing is. Now let's put it into some context. So Direction Investments, a very well-known, established investment advisory firm, builds exchange traded fund products, consults with clients, sits down with registered investment advisors and investors to build product. Why don't you take us through a little bit about your thinking about this space? Because I know it's new and innovative and you have interesting ideas on it.
Sure. So, when it comes to our ETFs and how we look about going about launching a new product, we really look towards index providers. That's kind of the first step to find out what might be the best benchmark that we want to put an actual investable product behind. So, fortunately, folks like MSCI, FTSE, et cetera, have done a lot of work on this subject and have a lot of deep research, far beyond the capacity that we would have internally here at Direction. So, we would lean on them to kind of help us isolate that ESG factor or factors within an ETF portfolio. So that's really who we seek to for that intellectual kind of property or capital when formulating an investment strategy like ESG.
And then you take it to the client, and then you've got to understand from the client's perspective what they do and don't want to include outside of what the index providers like MSCI, Russell, S&P, and others have provided you in terms of the intellectual capital.
To an extent, yes. I think what we're looking at right now is an ESG industry, specifically on the ETF side, with 90 different products out there. So everyone's got a little bit of a different type of flavor that they're coming to market with. And as we think about, potential launch in the space, we're really looking at, how can we build either a better mousetrap or something that's a bit different than some of the broad kind of screening criteria out there. So, we'll be actively working with those index providers to kind of discuss through that to find out how we can add kind of our own brand to this space.
And Ryan, how much, we didn't talk about this in the first segment, but fees are always an important factor for many clients. Exchange traded funds and indexing are known to be both investment strategies that are known to be lower cost. Does SRI or sustainable investing, does that add a premium to that? Do those additional screens add a premium to product costs?
I think you can make the argument that yes, there is a lot more research, there's a lot more data that needs to be looked at to kind of formulate which companies are doing well in these factors and not in these factors. The good news is that data is now available, and it's something that is easily, tracked by several entities that is, pretty much, available to package into a product. Whereas if you're going back 20 years ago, I couldn't imagine what it would take to get to the point of understanding how each, entity in the S&P 500 ranks on these factors. So there's been a lot of work done to get to the point where each one of these is quite measurable by the index providers. So, with that and the competition in the space, costs are coming down. So maybe a premium, but maybe not as much as you might think.
Yeah, it sounds like it. And Going back to the trends, is the U.S. behind its international friends in Europe, France, Britain, and around the globe? Are we behind in terms of the ESG SRI trend relative to our peers?
No, I don't think that's the case. I think there's been different points in time where there's been kind of different perceived leadership from the top. When it comes down to the actual investment of dollars, that's something where we're clearly leading in that space. So when it comes actually down to the actual investor capital committed to this space, the United States has been leading the charge. I think at different points on different specific initiatives related to environmental or social or governance, maybe that someone else has carried the torch for us a bit at different points in time, but the U.S. still remains kind of the leader from a dollar investment standpoint.
And then in terms of companies, when you're talking to a client or you're building a product, you're not just looking at U.S.-based companies, correct? I mean, you're looking at companies that are international, companies that are based in so many other countries, and looking at relating that to the culture of the country that they're in. I would assume that has some element to it as well. So you're not just talking U.S. companies.
Correct. And it's the challenge gets even more difficult as you start to go across borders and dig into even emerging markets where they might not have the same types of governmental regulations on specific things about environmental, et cetera. So it gets a bit more difficult as you drill down to some of those more emerging or frontier markets or smaller cap companies, et cetera. But for developed markets, and again, across a lot of the large index providers, they've been tracking this data very closely for a considerable amount of time at this point. So there, of course, we can access it fairly easily. I think there's still some spaces out there a little bit less clear, but.
Yeah. Well, Ryan, I mean, this is obviously a very important and evolving space. We appreciate you coming on and educating us. I suspect that you'll be back at some later date. We'll have you back on to talk more about this topic and others, because both SRI, ESG, and exchange traded funds and indexing, obviously two of the biggest trends right now in investment management. I want to thank you so much for coming on, and we'll talk to you very soon, my friend.
Thank you, Jeff. Appreciate it.
Okay. And that wraps up this episode of BRN AM. Hope you found it helpful as well as educational. Hey, have a financial topic or someone of interest that you think we should interview? Don't forget, drop us a line. And for all the news in retirement markets, technology, personal finance, healthcare, and so much more, check out today's edition of The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Keep on saving, and don't forget, roll with the changes.
But if you're tired of the same